Good evening, sir. You able to hear me? Audio select பண்ணிருக்கீங்களா?
Hello.
Good evening, sir. You able to hear me?
Yeah, good evening, good evening. I can hear you. How are you?
Good. Nice to see you.
Yeah, same here, same here. My audio is okay?
Yeah, perfect. Loud and clear.
Video is also okay, no?
Yeah. Perfect.
Okay. Chalo. Swaminathan sir, how are you? Hello. Can you see me? I can't hear you. Swaminathan sir, I can't hear you.
How are you?
Yeah, now I can hear you. I am
All well?
fine. All well, all
Good to
good.
see you. Good to see you.
So, how many people have joined? I think there seems to be a little bit of connectivity problem. Can you hear me continuously?
50, 15. Yeah.
Yeah, we can hear you. No problem.
Okay, good.
So,
I hope there's no problem with the
good
connectivity.
evening. I'll start, Mr. Mathew.
Yeah, sure.
Good evening and welcome you all to this evening's presentation. Today's topic is related to opportunities in the stock markets and very interesting topic, and we are in very interesting times also. Markets are having touched the all-time high yesterday. The psychologically very important number of 50,000. It was around 2003-4 that Sensex touched 5,000. So, what is the significance of 50,000? The significance of 50,000 is if you had put your money in 2004, it has multiplied 10 times over a period of, say, about 16 years. A phenomenal type of wealth creation is what we are talking about. That is what this market is capable of delivering. To discuss about all that, the opportunities that the markets present to you, to the investors in wealth creation, we have a very eminent person, Professor Thomas Mathew. A brief introduction about Professor Mathew. He is professionally qualified. He has done his BCom honors from St. Xavier's College, Ranchi. He is from Thala, our Dhoni's place. So Madras has a very good connect with Dhoni. So man from Dhoni's place. So it is a hometown for you also, sir. We welcome anyone connected with Dhoni.
Thank you.
And
Thank you.
professionally qualified, he has ICWI, cost accountant. He has done his PGDM, and he is also currently pursuing PhD. Presently, he is the managing director, cum CEO of Odisha Capital Market Enterprises, and he is a director in Bhubaneswar Stock and Securities Limited. He is also a board member in Institute of Management and Information Science, Bhubaneswar. His previous experiences include as a junior executive in Heavy Engineering Corporation, assistant manager in Usha Martin Industries, and chairman and general director general of Mangalam Institute of Management, and also faculty in Ranchi chapter of Cost Accountants. He was a faculty member in Bhubaneswar chapter of the Cost Accountants. He is a visiting faculty to many business schools, including XIMB, Bhubaneswar, IMIS, Bhubaneswar, Krupa Jal Business School, Bhubaneswar, etc. And he has been a director in Bhubaneswar Stock Exchange, director of Mangalam Lubricants, chairman of Indian Institute of Hotel Management. And during his earlier days, he has represented Bihar in basketball. Very nice to know. A sporting personality here, good.
Thank you.
And represented school, college in various elocution competition, quiz competition, cultural events. A very rounded personality, having interest in multiple areas. Very nice to have you with us, sir. So I'm handing over the floor to you for your presentation. Very warm welcome to you, Professor Thomas Mathew. Over to you, sir.
Okay, thank you, Mr. Sundar, and thanks to Madras Stock Exchange for having organized this webinar, in which I am getting an opportunity to interact with a large number of people. And the situation that we are right now in also poses a very challenging situation for all of us. And this is the first time since World War II that such a big medical, social, and economic crisis has come onto the world. This is a challenge that we need to overcome, and I am sure the world is going to overcome this. And 2020 is a year that we will not forget in a hurry at all. We had a lot of major economic events which we had to cross over. I've just highlight some of them, like Yes Bank, for example, that was almost on the verge of closure, and that the government had to come and bail it out. And Franklin Templeton, as another mutual fund, a very large mutual fund, they had to close down their debt funds. So, which is also something that is unheard of because of all this pandemic. And the entire economy for almost 30 days, it went into a standstill. We had never, in our own lifetime, we had never seen a situation where the airlines, the railways, the buses, everything came to a standstill. Anyway, all of us have come to experience all those things. The net effect of that is the GDP in the first quarter was negative 23. So all along we had been having a very comfortable GDP growth of about 5%, 6%, 7% and all. So 2020, we were expecting a growth rate of about 8%. But now the numbers haven't come, but I am sure the final figure is going to be something like -5. So if the GDP is growing at -5, so that means the life is going to be tough for everybody. And there is every chance that the economy might go into a recession also. In spite of all this situation, we are finding that the capital market is booming. Like Mr. Sundar told that yesterday we had hit the psychological mark of 50,000, which was unheard of. Normally when this kind of a pandemic strikes, so at that time the market collapses. So temporarily in March, April, it collapsed to about 7,500, but now it has bounced back. So this kind of a thing is primarily driven by huge amount of foreign money coming into the Indian market. So I'm not sure about what is going to happen in the short term. Definitely the situation calls for a major correction. And I'm quite sure a correction will come. And unless and until the correction comes, the long-term growth of the capital market will get affected. So in the long term, I'm sure the market is going to reach greater and greater heights. So anybody who wants to invest their money in the capital market, so you can be sure of good times ahead. And the government is also supporting the capital market and the economy. They came with a big package of about 20 lakh crores, which is also affecting the market and the economy in a positive way. The economy is slowly, it is reviving. We are having a situation where we have found the vaccination for COVID-19, and very soon the COVID factor will be a thing of the past. So now we need to look ahead. And 2021 is a year of great importance for all of us. This is a year where we will see major changes that is going to come into the economy. The corporate world is also dynamically changing. We have the positive effects of GST coming in. The demonetization is something which is already in the past. We don't need to worry about that. So the future is going to be quite good. Now we are having a situation where the P for the market is quite high. But then I feel that is going to be a temporary thing, because a little bit of correction will happen and the growth in the economy is going to come in, because of which you will find that the entire economy is going to boom. The positive effect of GST has already started coming in. We are finding that the positive numbers are there for the economy. Because of all those things, we will have good year ahead. And now the challenges for investment, if you really analyze that, the first challenge that any investor faces is to beat the inflation. Because unless and until we are able to beat the inflation, so what happens is our net investment becomes zero, because you have a certain amount of inflation which eats away our capital. So ideally, to save yourself from the inflation loss, so don't keep your money in cash. That's a very simple thing which all of us understand. The next challenge that happens is to beat the bank rate of interest. Now, it's a very simple thing. You can put your money in the bank, though the rate of interest has dropped down from around 8% to 5%. But the challenge is to beat that 5% which the bank is giving you. If you get only 5%, so probably we are not very happy with it. So a good way of beating that bank rate of interest is to put your money in the capital market. So when you could put your money in the capital market, as Mr. Sundar was saying, that the money has appreciated substantially. So let me give you a figures. Like if you had invested 1 lakh rupees in 1980, so today it would have been worth 18 lakh if it had been put in a FD. And if you had put the same 1 lakh rupees in gold, it would have been worth 41 lakh rupees. And if you had put the same amount of money in silver, then it would have been 29 lakhs. So we are not having figures about the real estate, because real estate, it's very difficult to calculate, because the returns on flats, the returns on buildings, and the return on land is quite different and varies from place to place. Rural area has been given a different kind of returns. Metropolitan cities have given different kind of returns. So we don't have proper statistics for it. But coming to the capital market, it has given a phenomenal returns of 4 crore 88 lakh rupees. That means if you had invested 1 lakh rupees in 1980, today it is worth 4 crore 88 lakh rupees. And the amount of dividend that you are getting, that has not been calculated. So if you take the dividend also into consideration, so the amount of money that you get from the capital market is really huge. So we all should have faith in the capital market, because capital market is one area which gives you the highest amount of returns. So the idea is to keep a substantial amount of your money in the capital market so that it beats the inflation and it also beats the bank rate of interest that is being offered. Now, there is a big opportunity that lies ahead in the Indian capital market. So we are having India and China, the two big economies. These are only the two economies which are progressing at a very fast pace. Of course, this COVID has put a temporary stop to the progress that we were having, but very soon we will be overcoming that. When we overcome that, we will find that we will be having a good rate of returns in the long term. Whatever is the bank rate of interest, I'm sure you will be getting a much higher rate of returns. And a positive thing that has happened in the corporate world is that till very recently, the rentals were very, very high. Now, COVID has put a temporary stop to that. So we are getting premises on a very reasonable rate of interest, which is again going to help the corporate world. And again, the lower rate of interest is going to help the corporates because they would be able to borrow at a lower rate of interest and go for investments and go for expansions in the existing businesses, which is again going to be very positive for the corporate world. And the third thing is there has been a little bit of softening in the salary segment also. So normally the high salaries that the corporates had to pay or the corporates were used to, that is also come down a little bit. So these factors have been very positive for the corporate world. And the positive effect of GST is also coming to. So the many small timers who were evading taxes and they were selling goods by not paying GSTs and all, so they have been wiped off. So their businesses have also come into the corporate world. People who have been honestly paying taxes, so they have got that businesses also. So that means the corporate world has been definitely being benefited by all those things that has happened in the capital market and the GST developments. So because of which you will find that there is going to be a major shift in the corporate's profitability in the year 2021. Year 2020 is something that should be ignored for all statistical purposes. Now the challenge that lies before all of us is how to beat the index. We have the capital market, which gives you a normal rate of returns. How can we increase our returns, which will give a higher than the market rate of return, which is let us take the Sensex returns. So this is something that we should be taking as a challenge. So first of all, when we start investing in the capital market, we have to look into the company profiles, the industry also. So we have to analyze the industry, like the fundamental analysis that we must have learned in our college days and all. We have to do the economy analysis, the industry analysis, and the company analysis. So in addition to all those things, we have to factor in one, the profits of the company, the earning per share that the company is having, and vis-a-vis the market price. So that factor we call as the PE factor. That means the market price divided by the earning per share. So we should have a comfortable earning PE ratio. It should be not more than, let us take about 30. If it goes beyond 30, so that means the scope for higher appreciation that comes down substantially. So we should select those companies where the P ratio is comfortable. Then the next factor that we need to look for is the growth rate in the company and in the industry. Any industry which has got a good growth rate. For example, today we are finding that the banking sector, the IT sector, the growth rate is fairly good. So these are the industries which are going to do well because the growth rate is always to be checked up. If the growth rate is higher than the GDP rate, then we should be very comfortable with that type of a companies because sooner or later we will find that our investment will start giving a fantastic rate of returns. And a quality that we all need to imbibe if you want to invest in the capital market is the quality of patience. Most people whom we have interacted with, they lose patience. They select the company, they invest also at the right time, but they don't have the patience. If they find a 5% or a 10% appreciation in just about a month's time, they are quite happy to quit and exit in the market, which is a very wrong strategy. A very common strategy, which is applicable to most of the investors, is that they might be investing in about 10 different companies. And if 3 of the companies good returns in a very short span of a time, so you have a tendency to sell it. And if a company has come down, so then you will never sell that company because you will never want to book losses. I would rather say change that strategy. A company which is done well in a very short period of time that is a company which is good, that has a potential to go up. And that should not be the company to sell. Whereas the other way around, if a company is giving you losses, that means it's not a very good company. That is a company you need to exit. So we always have a tendency to find out how the company is performing on a daily basis. Have faith in the company that you have invested in. It is something like a farmer. If he has planted a seed in the ground, so it takes time for the seed to mature and it to become a tree. Every time if you want to dig up and check up whether the seed is sprouting and all, so you will ultimately find that the tree is not going to grow up. So same thing happens to the capital market also. So too much of a churning on your portfolio is not something that you should do. If you have faith in a company, you invest in that and hold on to it for at least 2 to 3 years. So in 2 to 3 years time, you will find that the returns always starts coming. So never invest your money for short term. Always you should have a long-term vision for the investments that you're doing. If you have a long-term vision for the investment that you are having, then in that case, what happens is you will find that the returns are going to be good. Then the next concept is the concept of systematic investment plan. Now the mutual funds are all talking a lot about systematic investment plan. That means we need to invest our money on a regular basis. It is very difficult to time the market. When you should enter the market, it is something that even the experts have failed. So don't try to become an expert yourself. Don't try to time the market at all. If you are a salaried person, you are having X amount of salary and Y amount is your expenses. So X minus Y is your saving. So fix a target for yourself. That saving, a substantial part of that should come into the capital market on a monthly basis. So if you have targeted, let us take 10 different companies, every month keep investing in those companies itself. So that would be the concept of SIP. So if you can continue with that concept over a period of time, you will find that your portfolio becomes a substantially big portfolio. And over a period of time, say about 5 years or 10 years or 15 years time, you will find that your portfolio becomes a big one. And a very common mistake that most investors start doing is that when the market is at its peak, that is the time they enter the capital market. That is the time when they start investing the money in the capital market. With my own experience, I've seen that at the peak of Harshit Mehta's time, that was the time when maximum amount of money was flowing into the market, because the optimism at that time was the highest. My experience is that at the peak, the optimism is at the highest. At the rock bottom, pessimism is at its highest. So in that situation, it is very difficult for you to exit from the market at its peak because the optimism is at its peak. At the same time, if you want to invest your money at the rock bottom, it is very difficult because pessimism is at its highest. I still remember the evening when the World Trade Center was bombed. There was utter chaos in the market. There was total pessimism. Everybody wanted to quit. But that was the time when the market had reached its bottom. So this is one trait that a long-term investor should learn to be expert in. Like try to invest when the market is at its crisis. So when the market in recent times during COVID, it came to about 7,500. I told a lot of my friends to invest, but none of them are ready to invest because their apprehension was that COVID is going to make the economy worse and worse, because of which the market is going to fall more and more. Whereas that was the time when the pessimism was also at its highest and the market are also come to its lowest level. When market reaches the lowest level, so we should be investing more amount of money. So when you are having a systematic investment plan, so suppose every month you are investing your money. So what happens is when this kind of a crisis happens, So you would be able to buy more quantity. So when the market is at its highest level, so that at that time also you keep investing. But then what happens is you would be able to buy lesser quantity of the same thing. For example, you have identified a share. Let us take ONGC, whose market price is around 100 rupees. So if you want to put 50,000 rupees, so 50,000 divided by 100. So that means 500 shares you would be able to buy when the market price is 100. So when the market price goes to about 200, then what happens is you will be able to buy half the quantity. But when the market prices goes to about 50 rupees, you will be able to buy double the quantity that you have planned for. So over a period of time, keep doing that and you will find that a huge amount of capital appreciation takes place in the total amount of portfolio that you are having. And in the stock market, to make money, you have to keep your eyes and ears open. That is something that is very, very important. So let me give you some of my own success stories. So, Bhushan Steel. So I'm talking about 20 years back story. So at that time, Bhushan Steel was a very small company. And I saw the balance sheet and I found that it was a very good company. The profitability, the growth rate, earning per share, everything was comfortable. And the market price was 14 rupees only in those days. So. But still, it was a company in Delhi and I didn't have those contacts in those days to find out how good the company is or how bad the company is. So one day I was traveling in the rural area. Then I found that in one of the small dhabas, the roof was made by Bhushan Steel. And immediately I came back and I purchased 3,000 shares of Bhushan Steel. And within 3 months, the prices went up to about 45 rupees. And later on, Bhushan Steel became such a big company that the prices went up to about 4,000 rupees. But of course, it was very cyclical. And now again, Bhushan Steel has come back to its bad times. So you have to keep your eyes and ears open for opportunities. Federal Bank. I'll give you another example of Federal Bank. Again, about 25 years back, I analyzed that the market capitalization of Federal Bank was only about 100 crores. Whereas they had fixed deposits of the total deposits which they had was about 10,000 crores. And the total liabilities that we're having was only about 9,000 crores. So that means they had a net surpluses of about 1,000 crores. Against that, the market capitalization was only about 100 crores. So that gave me an opportunity to invest in Federal Bank. And in those days, Federal Bank was only about 35. And over a period of time, it shot up to about 200. Now, of course, the shares has been split and rights have been given. And now the price is 70 rupees or so. Another interesting story about myself I can tell you is about BPL. BPL was, it is a company which is manufacturing household items like refrigerators and microwave and washing machines and all those things. That was a time when my wife needed a washing machine and a microwave. So then she wanted me to help her out as to which one to buy. So I just told her to find out in the market which product is good and the price is reasonable and which gives you a good value for money. And I just put one criteria on her that whatever products you're buying, to buy from the same company. After sales services and all be much better if all the products are purchased from the same company. So she did an analysis, talked to her friends and all, found out the quality of different companies and all. And then finally she came with a suggestion that she wanted BPL products. So we purchased BPL washing machine. We also purchased BPL's refrigerators. And what I did is I simply put a big amount of money in BPL shares. BPL was about 55 rupees or so in those days. And within a year, it shot up to about 150 rupees. Because I realized one thing, though my wife is not an expert in the capital market, but you have to understand the basic instinct of a consumer. if the lady has taken a decision to buy the product, profitability over a period of time, and I encashed into that. So these are the opportunities that keep coming in. Morgan Stanley, that is another example I can tell you. Morgan Stanley was listed in the stock market, and you could not encash it. The buyback of that units was not allowed for a certain period of time. And the date for that encash year from now. For in those days, 1 year from that time, the encashment was there. And I found that the market price was going at a substantial discount to the NAV. And I realized that after a year or so, then Morgan Stanley would be encashing at NAV. So if the NAV was about 10 rupees, the market price was about 7 rupees. So then I realized if you buy at 7 rupees, you will be definitely getting at 7 rupees. Plus or minus whatever appreciation is happening during that 1 year's time. So I realized that the market can never drop by 30% in a year's time. So the probability that it will go up is more. And my calculation was right. In a year's time, the NAV from 10, it went to 12. So my investment from 7, it went to 12. So just imagine in 1 year's time, if your investment from 7, it goes to 12 rupees in a very safe investment where your portfolio is managed by experts and portfolio is invested in large number of shares. So then definitely the returns that you are getting, it is fantastic. Then another company I can tell you is Bajaj Financial Services. So again, Bajaj Financial Services balance sheet, when I was analyzing, I found that the market capitalization was about 4,000 or 5,000 crores. Whereas they had a huge amount of investment in Bajaj Auto. And the valuation of that itself was higher than the 4,000 crores, which was the market capitalization. And in the balance sheet, I found that they didn't have any liability at all. And in addition to Bajaj Auto, they had investment in a lot of other companies itself. So that gave me an opportunity to invest in Bajaj Financial Services. I don't remember exactly the kind of returns that I got, but over a period of time, I got a fantastic rate of returns in Bajaj Financial Services. So these kind of opportunities keep striking to us. And whenever that kind of opportunity comes to us, we should learn to encash into that. We got a very good opportunity just about a few months back when, because of COVID, so most of the companies was available for half its book value. In a normal situation, a share should not be available at less than its book value. But during COVID time, there was a large number of shares which was available at below its book value. That is the time when you should invest in the capital market. Now, coming to the current situation, we are having a situation where the market has really boomed. The boom has happened primarily because of lack of opportunity for investors to invest anywhere else. So all these years, there was a fantastic rate of returns in the real estate. The real estate prices were booming. So people who were investing in the real estate, they were getting a fantastic rate of returns. But in the last 3-4 years, we are finding that in the real estate market also. The total requirement of housing has come down because the supply side has been huge, because of which the real estate prices are not going up in the last 3 years. Gold prices have also shot up to the roof. Bank rate of interest is no more attractive because from about 7 to 8%, the rate of interest has come down to around 5%, because of which investors do not have any other option other than to invest in the capital market. And this is not an Indian phenomenon. It is an international phenomenon, because of which the big investors all over the world, they are looking to the stock market to park their funds. So because of which we found that a lot of first-time investors have also started investing in the capital market. A lot of foreign funds have also started coming into the Indian market. We find that every day, 3 to 4,000 crores of rupees is coming into the stock market. Because of which, primarily, the capital market has been driven more by the supply side, more amount of money coming into the capital market, because of which the prices have been going up. But normally, capital market will not go up continuously like this. This is something strange. So I feel that in the short run, a correction will come. And if a correction comes, that would be one of the best time to invest your money in the capital market. And coming to which particular shares that you should invest your money in, that is something that most of you would be interested in knowing. This is something that very difficult to say, because in spite of your best knowledge and experiences, I'm finding that number of times you do go wrong also. But let me tell you, you should have faith in the capital market, and some shares that I have identified which will do very well. One of them is NHPC, National Hydro Power Corporation. The market price of that is around 24 right now. And this is a company which is into hydroelectricity. They are producing electricity. And electricity consumption is something that will never stop. It will be there for, I don't know, for thousands of years. Electricity will be there with us. And in hydroelectricity, what happens is you have to do a certain amount of investments, and then the returns comes over a period of time. So NHPC has already invested their money in hydroelectricity powers and all, and now it is a time for getting returns. So the dividend yield of NHPC itself is more than the bank rate of returns. So you'll definitely get a better returns from NHPC than the bank rate of interest, and there is a substantial amount of opportunity for capital appreciation also. If you take these two factors, the capital appreciation and the dividend yield on NHPC, over a period of time, I'm sure that NHPC is going to be a very good rate of returns. And the risk aspect on NHPC is also very, very low. Unless and until the entire dam bursts, NHPC is very, very safe. And electricity consumption is something that will always be there for us. And then there is another company that you should be bullish about is Indian Oil Corporation. In the oil sector, they are the biggest players. And oil is something that will remain for at least the next 50 years. And the kind of profits that Indian Oil is making, so in about 10 years' time itself, you will be able to recover your money. So Indian Oil is also the market leader in the oil industry, and they are the people who are having a very good refining margins, and all over the country, and even outside the country, they are having a good network for sales and all. So they will never have problems selling the petrol and diesel. But though the petrol and diesel pricing is more or less controlled by the government, so that is one of the demerits, but that can be an advantage also. So they would always be assured of a normal rate of profits. And the prices are also not very high. The book value of Indian Oil is higher than the market value. So that is why you could take a very safe bet in Indian Oil Corporation. And the third segment that I'm bullish about is the banking sector. Though there has been a lot of moratorium for the people who have been defaulting, but then that is a short term. So whatever bad debts they have incurred has already been incurred. So further bad debts, I'm sure, will not be there. And in the banking sector, Federal Bank is a share that has got a lot of potential to do very well. If you see the balance sheet of Federal Bank, it has got a very good potential to do much better than what they are doing right now. So that is also another industry where you should invest your money in. And the next industry that you can invest is the hotel industry. Hotel industry right now, because of the pandemic, it is going through very bad times. But 2021, once COVID problem is over, So again, the hotel industry is going to do substantially better because the pent-up fury also will be there. Those people who have not traveled, not taken a holiday for the last about a year or so, they would be definitely start planning to take holidays. Once they start holiday packages and all, you'll find that industry is also going to do very well. And the investments that is required, that has already been made, the salary that they used to pay to the staffs, that has also substantially come down. So hotel industry is also something that you can look forward to. That will give you a very good rate of returns. So thank you all for giving me this opportunity to interact with all of you. And if there are any questions we can take, or we can have a general round of discussions from all those participants. Can you hear me?
Yeah, very clear, loud and clear. Thank you, Professor Thomas Mathew, for a wonderful talk on various, the opportunities that are available for the investors. That Bhushan Steel was a fantastic thing.
Okay.
Very similar to what you read in Peter Lynch's Beating the Street.
Yeah.
While going around, he will also come across a factory which was, lying unused for a long time. Suddenly he finds activity and he goes and picks up the stock. And that happens to be a multi-bagger. So we have our own Peter Lynch here. So I just want to know, where did you have your chai recently, and which is the next Bhushan Steel which is in the making?
That is right now, there's hardly anything right now. Because
Okay.
now I feel that the market will correct. It has already reached a level where they will not be able to sustain this kind of a price level.
Okay.
So for an investor, I would just say wait and watch till budget. After the budget, things will be clear, and in between, probably we'll have a correction, and the correction would be a good time to pick up good quality stocks.
So I'll just list down some of the key takeaways from the session. So don't churn too much and stay long term. Go for a systematic investment plan and try to invest in a crisis. Crisis is an opportunity for you to invest. So some of the key takeaways that Professor Mathew has given us, and also the story about Bhushan Steel, Federal Bank, BPL, all real, real life. You can, every single person, you can try to narrate himself, try to connect himself to such a similar situation, like what we saw in the case of Geo, just in front of our eyes. So many, crores or lakhs of people getting subscribing to Geo network, and you saw the market cap of Reliance going from 3 lakh crores to 12 lakh crores a matter of couple of years time. So there are such wonderful opportunities available in the market. Thank you very much, sir, for this kind of, good, interesting anecdotes and case studies. And of course, the recommendations or the suggestions that he has already provided, like in NHPC, Indian Oil, banking as a sector, hotel as a sector. This should provide a lot of, insight into to the people who are watching this. More than 50 people are part of the Zoom call, and many will be watching it in YouTube, and it is going to remain in YouTube for the days to come. So many more people will be watching in the days to come also. So many people are going to benefit by the insights that you have provided. Now I am opening the floor for questions. Anyone who is connected through Zoom can raise their hand so that I can unmute them and they can ask the question. Otherwise, I can also.
I got two, three
Yeah,
questions. So there was one question about
you
my
can take them. What is available in
personal
data?
PNB and NTPC. Somebody wanted my personal opinion about
Yes,
PNB
please.
and NTPC. So again, what I told about the banking sector overall, that is a sector which will do very well, because the last 1 year, the banking sector has been one sector which has been affected the most. And of course, we all know about the PNB story, where Nirav Modi swindled off about 12,000 crores. So that is a thing of the past, and they have already written off that. And in spite of all those things, PNB has started making profits. So the price that is there at about 35, it's a very good share to pick up. I'm sure PNB would be a share that will cross about 100 within a year or two. Now, 2021 is going to be a major watershed for PNB. You'll find that the profitability of PNB is going to be very high. So there is every possibility that the 12,000 crores which Nirav Modi has swindled off, some amount of that will start coming in. The quarter in which that amount comes in, so that will straight away get added to the profit of the organization, because that has been written off in the earlier years. Now anything that you get will be added. So the year or the quarter that you start getting that money, you will find that PNB will shoot up. So I'm very, very bullish about PNB. If you have money, put your money in PNB. Then next is they talked about NTPC. NTPC is a very strong company, but it is around 95. Don't expect it to become 200 in a very short span of time. But the dividend yield of NTPC is very good, and the business model is also very strong. But that is a model which will go slow and steady. It is like a steam engine. It will keep going without stopping for a very long period of time. It is not like a petrol engine. It will shoot up and come down also very fast. So NTPC, for long-term investors, I'll tell you it's very good. You will get a decent amount of appreciation. At the same time, you will get a very good rate of dividend yield on NTPC. You can keep investing in those things. Okay, another question I'm getting is, after budget, is it possible to invest in the motor segment? See, what is going to happen in the budget, it's a little difficult to say. But my apprehension in the budget is that the budget is not going to be a very good budget. So we cannot blame Nirmala Sitaram for it, because we are going through bad times. The government is having a lot of deficit. It has started printing a huge amount of money also. So definitely they will have to do something by which the fund generation happens. So probably maybe taxes might go up. So they are trying to revive the economy, but it's not going to be so easy. So it's not going to be very good for the capital market in the short run. So I expect that around the budget time, we will have another major correction. So yesterday and today, we have a situation where we can see that the market is dipping. So let us hope that the market falls a little bit. That will give us an opportunity to invest, and that is going to be healthy for the market in the long term also. So far as the motor industry is concerned, I don't think in the budget there's going to be any major concessions for them, because the economy needs to pick up on its own strength. So if the economy revives, you will find that the automobile sector also will start reviving. But in the short run, the consumption is not going to be very high, because of which the motor industry in the short run is not going to do very well. But in the long run, it is going to do well. Tata Motors has got very good potential. Ashok Leyland has also got very good potential. Hero MotoCorps, TVS, all are good companies, and they will be getting substantial amount of export orders also. Once they start getting that, 2021 end or 2022 is going to be a very good time for these companies. But 2021 earlier may not be so good. Okay, dear sir, as another question, market will correct. How much points you expect to correct? Okay, my expectation that Nifty will correct by about 400, 500 points. So that means now it is about 14,000. So it should come to about 13,700, 13,800. That is what I expect. That means about 500, 700 points correction I'm expecting around budget time. Any other questions? So budget is going to be very important. What lies ahead in the budget, we all don't know. But budget cannot be a positive budget this time. There might be taxes and all. Okay, after the budget, which sector can we invest in the market to get good returns? So as I said earlier also, you can invest in NHPC. That is a company that has got good potential. So it's a very steady company. If you see the dividend yield also, it's very high. So invest in NHPC, invest in IOC, Indian Oil Corporation also. The dividend yield also is going to be good, and you will get a decent amount of appreciation also. The oil prices which are low, so you will find that the benefit will come to Indian Oil, and they will do well. And in the banking sector, go for Federal Bank. That is also a bank that will give you good, fantastic returns. Karnataka Bank is also a share that I would like to invest my money in. It's a good share. Yeah. Any other question?
Anyone else connected through Zoom? They can raise their hand so that I can unmute them, so that I can come on camera and ask the question.
Yeah, another question is coming is about the emerging market, like whether India will do better or China will do better. So this is something that is a little bit debatable. So today what happens is, if you talk about the developed countries, Japan, for example, they are having negative rate of interest. So investors would never like to put their money in Japan because they are getting negative returns. So they will always look for emerging markets. In the emerging markets, what looks promising is India is there, China is there, Russia is there, Brazil and Argentina is there. These are the countries that has got good potential. So among all these things, India has got the best potential because we have a large number of educated people, and the working class of India is among the highest. And now we are finding that the economy is also being deregulated. The ease of doing business is something that the government has been talking about and working on it. So once that result starts coming in, you will find that India will do well. But of course, China also will take some share of it, because China as a manufacturing hub is very, very strong. Their infrastructure is also very strong. But because if it is a communist country, so the investors' faith in China is not very high. Whereas because India is a democratic country, we find that the faith in India is very, very high for the foreign investors. So you will find that a lot of money is going to come into India. And when money comes in, so you will find that opportunity also will come in. So Indian businessmen are among the smartest in the world. So they will encash onto it and will do well.
Multi-baggers that you can suggest.
Multi-baggers, I would rather say, don't try to go for multi-baggers right now. Go for safe investments. Because we are going through a time where the economy itself is going through very bad times. So all along we have been having negative rate of returns. So, but at the same time, the share prices have been going up because of huge amount of money supply. So if suppose the money supply stops in, so a correction might happen. So don't look for multi-bagger right now. Look for safe investments, good companies, like for example, Indian Oil. It's a very safe investments. Don't expect Indian Oil to go 10 times. So, but at the same time, it will not go to 1/10 also. So Indian Oil Corporation is something that you can invest. NHPC, I've been telling about NHPC. It's a very good company. Federal Bank, Karnataka Bank in the banking sector. And hotel industry, any hotel stocks that is available to you, keep picking down. It will do well. Though, don't look for multi-bagger in 2021. That should not be your idea at all. Wait for some time. We will find startup companies which are doing well, and those are the companies we should go for. Okay. Another question that has come to us, what are the quantitative numbers that we should be looking into in a company? So I'll tell you the most important factor that you should be looking into is the earning per share and the PE, because to find out PE, you have to know find EPS. So earning per share and how many times of EPS is the market price. So it should be around 20, 25, 30. It should not be very high unless and until the growth of that company or that industry is very, very huge. So go for a company which gives you, which is available for a PE of around 25, 30, and which has got a good reputation, and you will not go wrong in the investment. Yes, any other question?
Impact of economic and information globalization on the functioning of international financial markets. How the globalization is affecting the international financial markets.
Another question that has come is about Karur Vysya Bank. Again, Karur Vysya Bank is also a healthy bank, but I have not gone into the details of that company, so I won't be able to comment on that. But I have gone into the details of Federal Bank and Karnataka Bank. So you can very comfortably go into it. There's another question that has come in, should we focus on PSU banks? For short term, I will not recommend. For long term, yes. PSU banks like State Bank is a good bet. PNB is a good bet. Canara Bank was good, but it has already gone up substantially. So I will not recommend Canara Bank. But PNB is a good bank. You can invest in that. Okay, what will be the GDP growth? It's going to be negative. My expectation is that it's going to be about -5% for the time being. Okay, how does algorithm trading, etc., is affect the small investors? Yes, definitely. Algorithms is something that is for the big players, and they are taking full advantage of that. So definitely, a small investors is definitely put to a big disadvantage. It's something like we are doing boxing with old shoes and all, and our competitor is having the latest shoes, so their footwork is going to be better than us. So that is a disadvantage we definitely are having. And the mutual funds and all who are going into algorithms and all, they are definitely having a big advantage.
Investment advice for beginners.
For beginners, go safe. Start investing in small amount of money in bigger organizations. If you want to invest in the IT sector, go for Infosys, Wipro, and TCS. If you want to go into the oil sector, go for Indian Oil. So you should prioritize that. You should invest only in the bigger organizations. So bigger organizations, they'll give you reasonable amount of returns, but it will never be a multi-bagger. That is the concept. So at least your money will be safe, because it has been generally seen that new investors, they come in when the market is at its peak. And they go for companies where a lot of people are recommending it. So a company which does not have a good balance sheet, whose fundamentals are very weak, but the emotions are very strong or very positive on that company, those are the companies where small investors put a lot of their money in, and they lose heavy time into it. And then they completely withdraw for the money from the market. So that's why that should never happen. So for a beginner, you should always put your money in big safe companies. Like I've given you some example, like NTPC, for example. In the power sector, they are the largest. I've given you an example of Indian Oil Corporation. They are the biggest in the oil sector. I've given you an example of NHPC. They are the biggest in hydroelectricity powers. Then in the hotel industry, East India Hotel, they are the biggest. So these are all very safe companies. For a beginner, always go for that kind of only. So don't go for companies, penny stocks and all. People will say that it's a 5 rupees share, like Suzlon, for example, is 5 rupees, it will go to 50 rupees and all. So you will have a tendency to put your money in companies like Suzlon. So if you are a seasoned player, yes, you do analysis, can invest in companies like Suzlon where the potential is there. But new investors, I will never recommend to go for those type of companies. For new investors, go for big companies which are very safe. I've given you 4-5 examples: NHPC, Indian Oil Corporation, Federal Bank, PNB, NTPC, East India Hotel. Go for those things. So you won't regret at all. I'm sure in the next about 15-20 days, we will have a major correction. So when that correction comes in, very safely put your money in the stock market. You will never regret.
Impact of new president on Indian IT sector.
It's going to be positive. It's going to be positive because the vice president herself has got Indian origin, and this time we are finding that there are a lot of people who are Indian origin in the cabinet and all. So I'm sure it's going to be pro-India, and it's going to be good for the IT industry.
Nifty Bees for long-term investment through SIP.
It's good, but you won't get a very high rate of return. You will get a standard rate of returns. For new investors and people who are risk averse, it's good. Go for it.
Expectations from this year's budget.
I told you, not very good. I don't expect a good budget at all this time. It's going to be a populistic budget, and it's not going to be very industry friendly. Whereas the market is expecting that it's going to be a pro-friendly, pro-industry friendly. So that way, there will be a big disappointment when the budget comes, because the market expectation is that it's going to be a good budget. But my personal expectation is that it's not going to be a good budget. So again, somebody has written, what are my tips? So again, I've given 5-6 shares. Go safe on that. So you can share my WhatsApp number. So if any good company comes up during budget time, what happens is a lot of opportunities are there, because some sectors will be in favor, some sector will be disrupted and all. So at that time, we will be able to do a good analysis about which company has got a good potential. And now the new numbers are going to come in, the quarterly results are going to come in. So which will give a direction to the company and to the economy also. So we will be able to take a very safe bet once more number of companies come with their latest figures. So let's wait for about 10 days or so. So we'll be getting a lot of companies whose results will come out, and we will be able to take a prudent decision as to which company we should invest our money in.
Any more questions?
So, Mr. Sundar, you can share my number with the participants also. So
Yes.
if there are any tips and all which comes to my mind, I will inform you.
Definitely yes. Definitely yes. I'll put it in this Zoom itself. The chat. I'll share the number. So those who are connected through Zoom will be able to.
For the moment, let them note down NHPC, Indian Oil Corporation, Federal Bank, PNB, East India Hotel, and NTPC. They're all very safe companies.
So, any more questions? I think looks that's about it.
Okay.
Yeah, thank you, sir. It was a wonderful session. In fact, incidentally, I just recall the WhatsApp forward I received some time ago.
Yeah.
It was on 21st of January 2008 when index hit a new high, and from there it crashed.
Yeah.
The meltdown started on 21st of January 2008. Exactly 13 years from that to the date, 21st of January 2021, we reached a new high, that to a milestone figure of 50,000. Okay. So the message said that is how patience is being rewarded. So that is what the essence of your presentation is also, for being a investor on a long-term basis, selecting good stocks, selecting safe stocks, which are going to give you good returns over a long term. So it was a wonderful presentation, sir. It was a pleasure having you with us. Thank you very much for all the insights and all the wisdom that you have shared. Thank you so much.
Okay, thank you. Thank you to you also for giving me this opportunity to interact with all of you. It was a great feeling interacting with all of you, and I'm sure we'll look forward to more sessions like this so that we will be able to share the latest informations that we have. Thank you. Thank you.
Yeah, Daily Gang and MSCFSL takes pleasure in having you with us. Thank you, sir.
Thank you. Thank you. Thank you, Mr. Swaminathan. Bye-bye.
WhatsApp number of Professor Thomas Mathew has been shared in the Zoom. So those of you who want to connect with him can connect with him and get inputs. Thank you very much.